Welcome back to my morning watch, I suppose, on Wednesday the 15th of June with me, Rich Perry, market analyst at Antic Markets. It is Fed Day, and let's have a look at Eurodollar, which has found a degree of support, although we had another strong bear candle yesterday. That's the third out of four sessions that we've had really strong sell-off actually on Eurodollar. But found an element of support, and we're still trading above yesterday's low. So that's a positive to take out. I mean, the momentum indicators are now taking on a more corrective bias. Yesterday I talked about the fact the RSI was bang on 50, but now it's sort of below 50 and sort of confirming this continued move lower. We've sort of also breached the pivot band around sort of 12.15 with that reaction low yesterday. Although, interestingly enough, not far off a close around that level. So, I mean, is it still intact? I'd say probably you're looking at that having been broken now. But the sequence of lower highs, lower lows, which you can see on the hourly chart in the last few days, certainly reflects this corrective mood we're in ahead of the Fed. Now, the Fed is obviously going to you'd imagine the Fed would completely change the outlook on this chart again, because the market is sort of looking for no rate hike and also possible dovish shift. I mean, we're looking at such things as changes to the dot plots, changes to growth expectations, and that could well start to induce a bit of dollar correction. If that was to be the case, then you'd see the dollar rally. So we've seen a bit of support, a bit of a euro dollar rally, which would be why dollar's about 10 pips higher today. But I wouldn't expect too much further volatility. I think the volatility will come only if we see a significant sort of shift in expectations of Brexit again, with maybe another poll coming out and maybe strong moves on sterling. Maybe that would induce a bit of a move on Eurodollar. But in front of the Fed, I don't expect anything really to change too much to what we're seeing at the moment. So we're seeing this support coming in. We've got the technical support at 1185 area, and that is, as I said, protecting this long-term pivot, which is the 111 figure area, which has been for a long time a significant for a long time has been a huge sort of pivot area for Eurodollar, which you can see here. So I still think that is a key support area, and if we did see a hawkish Fed tonight, say for example, you'd see dollar strengthening, you could see that tested once more. So that is your level to look out for on a hawkish Fed. But a dovish Fed, you may see the dollar weakening again, and you could even see a sharp rally. 113 figure area is the sort of initial resistance, which was yesterday's high, and also Monday's high. So resistance around 113 figure area, but initially you've got 112.40, which is an intraday high from yesterday, but also almost pretty much a reaction low from Monday as well. So minor pivot around 112.40, but 113 figure is the big resistance near term to watch out for on the Fed. So with that in mind, I wish you good luck in your trading on the Fed, and I'll speak to you later. Thank you.